Yo, what's up everyone? It's Mindframe here. And listen, I know getting started with investing can feel like navigating a maze blindfolded. Should you go with Vanguard, Freetrade, or maybe Hargreaves Lansdown? Each platform is like that friend with different strengths and weaknesses, right? And if you're new to all this, it's easy to get analysis paralysis and just quit before you even start. So in this video, we're going to break down the most popular UK investing platforms, what to actually look for, and how to choose the right one for you, especially if you're just starting with, say, £100 a month. First up, we've got Vanguard, the OG index fund powerhouse. Vanguard has been a cornerstone in the investment world for decades, and for good reason. Founded by the legend himself, Jack Bogle, Vanguard revolutionized the way we think about investing. Bogle's vision was to create a company that put the investor first, and he succeeded in doing just that. Now, if you're all about simplicity, low fees, and long-term buy and hold investing, Vanguard is seriously hard to beat. Their philosophy is all about making investing accessible and affordable for everyone. You can invest directly into their low-cost FTSE 100 or global tracker funds, and the fees? We're talking around 0.15%. That's incredibly low compared to many other options out there. Now, I know what you're thinking. Graham, Vanguard's website looks like it's stuck in the 90s. And yeah, it's true, their online interface isn't the most modern or user-friendly. And yeah, it's not the flashiest platform out there. But here's the thing. Vanguard isn't about the bells and whistles, it's about solid, reliable investing. But honestly, for a set-and-forget investor, it's absolutely ideal. You don't need a fancy interface to make smart investment decisions. You're not going to find fancy charting tools or fractional shares here. Vanguard keeps it straightforward, which can actually be a huge advantage. But that's kind of the point. The simplicity helps you stay focused on what really matters, your long-term investment goals. Vanguard is all about keeping it simple, keeping costs low, and letting the power of compounding do its thing over the long haul. Compounding is one of the most powerful tools in investing, and Vanguard leverages it to your advantage. Remember, investing isn't about chasing the next hot stock tip. It's about building a solid portfolio with diversified index funds and letting your money grow steadily over time. And Vanguard gets that. It's about building a solid portfolio with diversified index funds and letting your money grow steadily over time. And Vanguard gets that. They offer a wide range of funds that cover different sectors and markets, so you can easily diversify your investments. Plus, they have a rock-solid reputation. Vanguard is known for its integrity and commitment to its investors. They're literally owned by their investors, which means their incentives are aligned with yours. This unique structure ensures that Vanguard always acts in the best interest of its clients. No shady business practices here. Vanguard's transparency and ethical approach set it apart from many other financial institutions. So if you're the type of investor who wants to automate their investments, keep costs low, and sleep well at night knowing your money is in good hands, Vanguard is definitely worth checking out. With its long history of success and investor-first approach, it's a solid choice for anyone looking to build wealth over the long term. Next up, let's talk about Freetrade, the app-based platform that's like the Robinhood of the UK. Seriously, if you're glued to your phone like most people, Freetrade makes investing incredibly beginner-friendly. You can invest in UK and US stocks, plus ETFs like VUC, which is a popular FTSE 100 tracker. And the best part? Regular investing is completely free. They even offer a stocks and shares ISA for a flat fee, which is awesome for UK investors. Now, Freetrade's not going to give you the same level of in-depth research and analysis as, say, Hargreaves Lansdown. But that's not really their target audience. They're all about making investing accessible and approachable for everyone, especially younger generations who are used to sleek, mobile-first experiences. Plus, they've got a really cool community feature where you can connect with other investors, share ideas, and learn from each other. So if you're new to investing, prefer doing everything on your phone, and want a platform that's easy to use and understand, Freetrade is definitely worth a look. Now let's talk about the grandpa of UK investing platforms, Hargreaves Lansdown. This platform has been a cornerstone in the investment community for decades, earning a reputation for its reliability and comprehensive service offerings. They've been around forever, and they're known for their reliability, vast selection of investment options, and top-notch customer support. Whether you're a novice investor or a seasoned pro, Hargreaves Lansdown has something to offer everyone. Seriously, If you ever have a question or need help with something, their customer service is phenomenal. Their team is always ready to assist, ensuring that you have a smooth and hassle-free experience. With Hargreaves Lansdown, you get access to literally thousands of funds, including active funds, passive funds, you name it. This extensive range allows you to diversify your portfolio in ways that many other platforms simply can't match. They also have a ton of research and analysis tools, so if you're the type of investor who likes to do their homework, they've got you covered. From detailed market reports to in-depth fund analysis, the resources available are second to none. But here's the catch. All that comes at a price. The premium services and extensive resources are not free, and this is where Hargreaves Lansdown can be a bit of a double-edged sword. Hargreaves Lansdown's fees are definitely on the higher end, especially compared to the likes of Vanguard or Freetrade. Their fee structure can be a significant consideration, particularly for those who are just starting out or have smaller portfolios. So if you're just starting out with £100 a month, those fees can really eat into your returns, especially in the beginning. It's crucial to weigh the benefits of their services against the cost to see if it aligns with your investment goals. However, if you're a more experienced investor with a larger portfolio and you value the peace of mind that comes with a well-established platform and excellent customer service, Hargreaves Lansdown could be a good fit. The higher fees might be justified by the quality of service and the extensive range of investment options available. Ultimately, it's about finding the right balance between cost and value for your specific needs. All right, let's talk about Trading 212. This platform has been making waves in the investment community, and it's easy to see why. Now, this platform is super popular, especially with younger investors, and for good reason. It's designed to be user-friendly and accessible, making it a great entry point for those new to investing. They offer zero-commission trading, which sounds amazing on the surface. Imagine being able to buy and sell stocks without worrying about fees eating into your profits. And their app is super clean and easy to use. The interface is intuitive, making it simple for anyone to navigate through their investment options. You can find a good selection of ETFs and index trackers on there, including FTSE 100 funds. This variety allows you to diversify your portfolio with ease. However, there are a few things to keep in mind with Trading 212. It's not all sunshine and rainbows. First, they've had some issues in the past with their ISA feature. This has caused some concern among users who rely on ISAs for tax-efficient investing. So, just make sure you do your research and understand the ins and outs before you jump in. Knowledge is power, especially when it comes to your hard-earned money. Second, and this is the big one, zero-commission trading can be a double-edged sword. While it lowers the barrier to entry, it can also lead to some unintended consequences. It can make investing more accessible, which is fantastic. More people can participate in the stock market and potentially grow their wealth. But it can also encourage people to trade more frequently, chasing short-term gains rather than focusing on long-term growth. This can lead to bad decisions and lower returns. Frequent trading often results in emotional decision-making, which is rarely a good strategy. Remember, investing is a marathon, not a sprint. It's about patience and discipline, not quick wins. It's about buying and holding great companies or funds for the long term. This strategy has historically proven to be more successful. Not trying to time the market or make a quick buck. Market timing is notoriously difficult and often leads to losses. So if you're considering Trading 212, take a moment to reflect on your investment goals and strategies. Just make sure you're using it for the right reasons. Align your use of the platform with your long-term financial objectives. Focus on long-term investing, not day trading. This approach will serve you better in the long run, helping you build sustainable wealth. Finally, let's talk about Nutmeg, the robo-advisor. Now, if you're the type of person who hates thinking about their investments or just doesn't have the time, Nutmeg might be a good option for you. Basically, it's like having a personal financial advisor, but without the hefty price tag. You tell Nutmeg your risk tolerance, your investment goals, and they'll build and manage a diversified portfolio for you. They'll even rebalance it automatically, so you don't have to lift a finger. Now, the downside is that Nutmeg is more expensive than some of the other platforms we've talked about. You're paying for the convenience and the hands-off approach. But if you're someone who values simplicity and wants to automate their investments completely, Nutmeg is worth considering. So there you have it, the top UK investing platforms broken down. Look, I know choosing a platform can feel overwhelming, but don't let it stop you from starting. The most important thing is to just take action. Pick a platform that aligns with your investing style, your budget, and your habits, and just start investing, even if it's just £100 a month. Remember, the longer you wait, the less time your money has to grow. If you found this video helpful, make sure to smash that like button and subscribe for more beginner-friendly investing content every single week. This is the long game, where we build wealth slowly, safely, and confidently. I'll see you in the next one.